you forget what's actually happening. And, kind of in the end, every single, major crypto position you've ever sold, you regret when you look back. Because if you divide any asset by crypto, any single asset on earth, they all go down in price versus owning Bitcoin. It's of that magnitude of wealth generation in one short period. To put it in perspective, at $100 trillion, the S&P 500 has taken 100 years to accumulate $50 trillion of value. 100 years, and we will do it in less than 20.
Globally, the crypto market capitalization has surpassed $2.5 trillion, with Bitcoin setting a record high of $73,750, with a market capitalization reaching $1.44 trillion on March 14, 2024. The cryptocurrency market is forecasted to reach $343.5 million in 2024, with an estimated annual growth rate of 7.99%, leading to a projected total of $467.2 million by 2028. The founder and CEO of Real Vision and global macro investor predicts that by extrapolating the current growth of crypto, we can expect to reach 1 billion users by the end of 2025 and 4 billion by 2030, which would encompass half of the world's population. Raoul Pal has a rich background in finance, spanning over 35 years. He previously worked at institutions like NatWest and Goldman Sachs, and in the hedge fund industry, serving legends like Paul Tudor Jones, Stan Druckenmiller, and Louis Bacon. Bitcoin, the first and most well-known cryptocurrency, has experienced several boom and bust cycles since its inception. Despite this volatility, the overall trajectory of Bitcoin and the broader cryptocurrency market has been upward, capturing the attention of traders and speculators alike. Raoul Pal highlights that in the end, almost everyone regrets selling major crypto positions when looking back. This is because if you compare any asset to crypto, specifically Bitcoin, all other assets tend to decrease in value relative to it. He provided a comparison, noting that the S&P 500 has taken 100 years to accumulate $50 trillion in value. In contrast, the crypto market is projected to achieve $100 trillion in less than 20 years. Ready to uncover more insights? Remember to subscribe and turn on notifications always to get our latest content.
My working thesis now is, you've seen me post in the past charts of the adoption of crypto. So we use active wallets. Now, we know they're double counted, but we're comparing it to the internet, which was IP addresses, which are also double counted. So it's fine, right? It gives you the rough rule of thumb. There's about 520 or 550 million wallets, active wallets out there. It's growing at twice the speed of the internet. So this is the fastest adoption of any asset class or technology the world has ever seen. Technology side's just been beaten by AI, just because Microsoft and other things can install it everywhere instantly. But it's massive because it is an asset, and AI is not an asset. So if you just extrapolate that chart, you get to 1 billion users by the end of 2025 and 4 billion by the end of 2030. Okay, that's half the world. Okay, so what does that mean? Well, you can also take the log chart of Bitcoin and just extrapolate out into the future, and you can see the trend rate of growth, the exponential trend over time. So it gets to somewhere like $1 million. And what happens is the space goes from 2.5 trillion, where it is today, to, let's say at the end of this cycle, 10 trillion, maybe 12, maybe 15, depending what the cycle's like. And then on to 100 trillion, which is the size of most of the other asset classes like equities. In fact, most of them are larger than that. So that movement from 2.5 trillion to 10 trillion to 100 trillion is the trade. And that also happens to be the fastest, largest accumulation of wealth the world has ever seen. Nobody's ever seen anything like this before. It's an equivalence to the entire baby boom generation entering into financialization, buying stocks and stuff like that, plus the opening of China to the WTO, plus the Iron Curtain coming down in Russia. It's of that magnitude of wealth generation in one short period. To put it in perspective, at $100 trillion, the S&P 500 has taken 100 years to accumulate $50 trillion of value. 100 years, and we will do it in less than 20. People lose the wood through the trees in this space, right? It's so easy to get caught up in the drama, the volatility, the down cycles that make everybody feel like shit, then the glory times. You forget what's actually happening. And, kind of in the end, every single, major crypto position you've ever sold, you regret when you look back. Because if you divide any asset by crypto, any single asset on earth, they all go down in price versus owning Bitcoin, or you choose your asset, right? And it's like, once you realize that, it's really difficult to get that out of your head. And so it, to me, became a realization over time from about 2020 onwards that there was no point doing anything else. Even though I'm a true macro guy and I used to do absolutely everything else, I now observe what the dollar's doing and stuff like that, but only within the context of where it's going with crypto.
The Bitcoin price is down by 2.5% on May 23rd, surprising traders who were certain that new all-time highs were in the cards after the cryptocurrency's early week rally to $72,000. Raoul Pal emphasizes the common mistake made by investors, which includes understanding and managing the fear of Bitcoin down cycles. He mentions seasoned veterans of the crypto space who have successfully navigated these cycles by adding to their positions during downturns. Furthermore, U.S. Treasury yields climbed this week as investors pivoted from government bonds to fresh corporate debt amid mixed signals from Federal Reserve officials. Raoul Pal advises against using leverage due to its inherent risks, particularly in an asset class with 70% volatility. Yields also come with risks, whether it's the potential for locking up assets or the risk of platform failures. Now, let's redirect our attention to a video.
The single most important thing. Most people, I can see it already scared of the down cycle to come because they've all got PTSD of the last one. But if you want to go to the OGs of this space, the Dan Moorheads, the Wences-Caceres, all of these guys, they didn't give a fuck. They just rode it and added into the down cycles, and they've compounded massive wealth. And there's many people who are not public who've done the same. But most people fear the downside more than thinking about its opportunity. Even though it never feels great, I was excited about it in 2022 because it meant I could add to my positions at great levels and compound. So then you get back to an all-time high much sooner than everybody else who's just done nothing. So that's really interesting. And so time horizon is super important. If you just don't want to deal with the downside because your psychology doesn't allow you to do it, that's fine. You need to really think that thing through. Now, what happens is people lose their fucking minds in a bull market and in a bear market. In a bear market, they get rid of all their tokens. They say, never again. This is the worst thing I've ever done. And in a bull market, they end up buying too much shit, stupid shit. And really, to not fuck up the movement from 2.5 trillion to 10 trillion to 100 trillion is to own the highest quality assets and do nothing. Now, we all have an inner degen somewhere within us. So allow yourself a bit of space to do that. I've got positions in dog whiff, hat and bonk and, you name it. But when I look back in my portfolio, it's probably 1%. But I look at it on the screen all day. I'm checking the whiff price all day. It's ridiculous. It's 1% because the rest is just a buy and hold long-term position. This underappreciated crypto like Cardano or XRP or whatever, fine. But you're taking a risk that they're not going to appreciate the same as the proven assets. Now, the proven assets keep trending. If I look at the compound rate of growth, the annualized rate of growth, Bitcoin's 150%, ETH since 2012, ETH is 180, about 160, 70%, something like that, since 2015, 16. And that's per year. I mean, this is bananas returns. And then Solana's like 200. And that was a snapshot in February before. I mean, many of these aren't at all-time highs yet. So the returns from just owning the top assets is so good. Now, I also understand that a lot of people may only have 10 grand worth of savings. So they think, well, even if Bitcoin goes to 1 million, that's a 14x. So I've got 140 grand. Can that even get me a deposit on a house? Is that a retirement saving? I get it. So people really want to take more risk. but just do it intelligently. And that's how not to fuck this up. Because if you turn your 10 grand into zero and you do it every crypto cycle, which many, many, many people did, the NFT cycle destroyed a lot of people, and a lot of people got destroyed in just all of the kind of super early stage speculative stuff. The other thing that people tend to do is they love getting a yield. I don't see the point. So yields have risks. They come with a risk. Even staking yields, it often means if you're not liquid staking, you've locked it up. If it's liquid staking, there's the risk of the platform, of Lido or whoever else going under, or something happening, right? Something unexpected. And in crypto, something unexpected always happens. Having leverage on a 70% volatility asset class is a very, very dangerous thing.
Bitcoin has no shortage of optimistic price targets this week, but some observers are focusing on the long term. In an interview on CNBC earlier in May, Lee, a managing partner and head of research at Fundstrat Global Advisors, revealed that Fundstrat sees a base case six-figure Bitcoin price in 2024. Arthur Hayes, ex-CEO of BitMEX and current CIO of Maelstrom, predicts that geopolitical and economic shifts balancing the exchange rate between the US dollar and the Japanese yen could drive Bitcoin prices to $1 million. What is your price target for Bitcoin in the coming days? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.